If you remember, I shared a detailed analysis of Bitfarms with you about 25 days ago. You even liked that video so much that it received more views than my average videos. In today's video, we will look at the company's Q3 performance, analysts' expectations, the impact of the recent decline in the crypto and stock markets on the company, and several other important points you definitely need to know. In fact, this isn't the first company I've analyzed and shared with you. For example, in more than 60 videos, I analyzed dozens of early-stage companies like AMPX, Rigetti, Wolf, and Hive, and most of them have brought us hundreds of % in gains since then. If you don't believe it, go through my channel and watch those videos one by one so you can also benefit from these opportunities, because most of these companies are still in the early stages. So, let's begin. Despite Bitfarms stock dropping more than 40% in the past month due to the broader market downturn, the company reported $69 million in revenue for the third quarter of 2025, which is 156% higher compared to the same period last year. At the same time, the company announced an operating loss of $29 million and a net loss of $46 million, which equals a loss of 8 cents per share. Adjusted EBITDA came in at $20 million, meaning 28% of revenue. However, the company did not meet analysts' expectations of $85 million in revenue. According to Motley Fool's analysis, both revenue and earnings per share came in lower than Wall Street forecasts. Wall Street expected a loss of 2 cents per share, but the company announced 4 times that figure. Naturally, this missed expectations created concern in the market. In other words, even though the company showed strong growth, market participants are still worried about profit margins and long-term profitability. In short, while Bitfarms is increasing its revenue, net losses continue due to high costs and uncertainty in the sector. In the third quarter, Bitfarms' total hash rate remained stable at 14.8 exahash per second, and the company's total mining equipment capacity reached 341 megawatts. In Q3, Bitfarms mined a total of 520 Bitcoin, and for part of its operations, the company sold some of this Bitcoin. According to a reliable source, the company produced these 520 BTC at an average cost of approximately $48,200 each. At the end of Q3, Bitfarms held 1,827 BTC on its balance sheet. In terms of energy efficiency, Bitfarms mining equipment is considered among the most advanced. The devices consuming 18 W/TH are highly efficient compared to the market average, and overall the company's energy infrastructure has a nominal capacity of 2.1 gigawatts. Although investors are concerned about the company's financial report, Bitfarms has attracted significant capital in recent months. On October 21st, the company completed a $588 million convertible note issuance with a 1.375% coupon rate and maturity in 2031. It was reported that Bitfarms received approximately $568 million in net proceeds from this transaction. Additionally, as part of its at-the-market equity offering that began in March 2024, Bitfarms raised an additional $375 million. This capital will primarily be used for investments in energy infrastructure, mining equipment, and future HPC and AI projects. At the same time, Bitfarms is implementing new technologies and strategies. In addition to traditional Bitcoin mining, the company announced its Bitcoin 2.1 program, which involves selling long-dated call options on future mined Bitcoin or BTC held in its accounts. This helps reduce production costs, increase revenue, and attract additional funding for infrastructure expansion. One of the most important technological developments is data center transformation. Bitfarms will fully convert its 18 megawatts facility in Washington into a high-performance computing and artificial intelligence center. The company has signed a $128 million licensed equipment supply agreement for this purpose. The project is planned to be completed in December 2026. The new center will use NVIDIA GB300 series AI GPUs and specialized cooling systems. Bitfarms CEO Ben Gagnon stated that converting the Washington facility into a GPU-as-a-service model could generate significantly higher returns compared to Bitcoin mining. In other words, in exchange for $500,000 in capital expenditure, the company expects long-term stable cash flow. At the same time, the company is trying to convert the 60 megawatts energy contract at the Panther Creek site in the Philadelphia, Pennsylvania region into firm power, potentially unlocking up to 500 megawatts of additional usable capacity. In parallel, with the acquisition of the Sharon campus, Bitfarms plans to build an HPC center using an additional 110 megawatts of capacity. The company is also negotiating with PPL Electric to expand a 410 megawatts project up to 500 megawatts. There have been no specific regulatory regulatory changes that directly affect the company since the Bitfarms video I shared with you 25 days ago. However, regulations toward the crypto industry as a whole have tightened. For example, in the summer of 2025, the U.S. Congress passed rules like the Genius Act, which support digital payment systems and provide clarity on crypto regulation. The EU's MiCA rules, which came into force at the end of 2024, also strengthened oversight over all blockchain assets. Such regulations can create stability in the market but may also introduce additional reporting and operational costs. Bitfarms is currently withdrawing from riskier markets such as Argentina and Paraguay and relocating toward the US and Canada. For example, in the fall, the company decided to halt its BTC mining operations in Argentina and Paraguay. This aligns with the company opening a second administrative office in the US and transitioning to US GAAP reporting standards. In October 2025, the price of Bitcoin rose to $126,000 but then dropped by nearly 30% in mid-November, falling below $90,000. This decline wiped almost $1 trillion from the broader crypto market and caused record outflows from Bitcoin ETFs. Sentiment rose to extreme fear. According to Market Minutes analysis, this situation triggered aggressive selling, and investors began unloading high-risk positions. As a result, crypto mining stocks fell sharply. These include companies like Bitfarms, Riot, Hut8, Marathon, and Bitcoin Suisse, all of which lost significant value after the sell-off. Bloomberg Law also states that Bitfarms plans to phase out Bitcoin mining over the next 2 years and shift toward AI computing infrastructure as mining margins continue to weaken. In other words, the weakness of the crypto market has pushed Bitfarms to make certain strategic changes to its business model. Bitfarms is considered one of the leading Bitcoin mining companies operating in both Texas and Canada. However, in terms of risk-reward, the company sits roughly in the middle of the sector. According to Zacks analysts, Bitfarms shares rose about 48.8% in 2025. This figure significantly outperformed both the crypto mining industry's average growth of about 32.1% and the S&P 500. In other words, the company has been among the strong performers. Bitfarms has even outperformed some competitors, such as BitDigital, although it slightly trails behind rapidly growing companies like Cipher Mining. Motley Fool also highlights that although Bitfarms has announced its strategy to move into AI and data centers, other companies in this space are progressing faster in certain areas. Among competitors, Riot Blockchain and Marathon Digital are still fully focused on Bitcoin mining. Hut8 and IREN, on the other hand, operate under a hybrid model that combines mining with AI/data center services. While Bitfarms is also moving in this direction, analysts say the company is approaching this transition more cautiously and slowly compared to its competitors. Before moving on to analyst opinions, I want to remind you that my goal on this channel is to reach 1,000 subscribers by the end of the year, and if we achieve that milestone, I will reveal every company in my portfolio that has made me significant profits. If that interests you, feel free to subscribe so we can reach the goal together. Now we can continue. Investor interest is also noteworthy. For example, Thames Capital opened a new position in Bitfarms in October, investing even after the stock had already risen 112% during that period. The fact that Thames Capital also holds companies like Hut8 and IREN shows that the fund generally prefers companies engaged in both mining and data center infrastructure. Overall, Bitfarms stands out in the sector because it operates both mining equipment and data hosting services. However, most analysts remain cautious about the company's future performance. While risks are considered high, the potential opportunities are also seen as significant. Analyst opinions are mixed. For example, Compass Point rated Bitfarms as buy in September, and Northland Securities set a price target of $7 in October. Others have taken the opposite stance. For example, Weiss Ratings reaffirmed a sell rating, and Wall Street Zen downgraded the stock from hold to sell. On November 14, H.C. Wainwright lowered its price target from $5.50 to $4. And before I say goodbye, I want to remind you that if you want to receive up to $30 worth of free stock or cryptocurrency, you can register on the QuantFury platform using my invite code through the link pinned in the comments. And if you enjoy my videos, you can buy me a cup of coffee through the other pinned link to help increase my motivation to continue creating new videos.